Welcome to the deep dive. We've been looking through the material you sent over, and we're tackling a really big question today, one that's clearly top of mind for you, and honestly for countless others too. Is this huge surge we're seeing in AI stocks? Is it a real solid boom, or is it more like a speculative bubble just waiting to pop?
It's a great question. And look, our analysis suggests it's really, well, it's a hybrid. It's complicated.
A hybrid.
Yeah, you've got this foundational tech-driven boom. That part's definitely real. But layered on top, you also have these pretty significant and frankly dangerous bubble-like signs,
Yeah.
especially in certain areas.
Okay.
So our mission here is just to quickly unpack what's driving both sides of that so you know what to look out for.
Right. And one thing from your research that really jumps out, what makes this maybe different from past tech booms? AI is landing on already mature global infrastructure.
Exactly. That's key.
We're talking cloud computing, high-speed internet, smartphones everywhere.
Yeah.
It's all already there.
Right. Unlike, say, the dot-com era, we're not building the basic internet pipes anymore. The tracks are laid. AI is like the high-speed train running on those existing tracks.
And who's driving this train? That's also fascinating, isn't it? It's not a bunch of startups burning cash.
Not primarily, no. The leaders here are established, profitable giants. Think NVIDIA, Microsoft, Google, Amazon. These companies are actually making billions in real revenue from AI services now.
Billions now.
Yeah, and they're using their massive cash flows to just pour back into AI development and expansion. That creates a really stable core for this whole thing.
And we're seeing actual results too, right? Like tangible benefits.
Absolutely. Measurable productivity gains are popping up everywhere. Drug discovery is accelerating. Customer service is being transformed. It's not just theoretical.
Okay, that boom part sounds convincing. Very solid foundation. But there's always a but, isn't there? Where does the bubble stuff, that froth, start creeping in?
That's the crucial flip side. The froth really shows up where stock valuations get, completely disconnected from the current business reality.
Driven by hype.
Driven by the story, by future potential rather than today's numbers. Take some of these story stocks like C3.ai is a good example from your sources.
Okay.
Well, in the recent quarter, fiscal Q3 25, they posted an $80 million net loss on just under $100 billion in revenue.
Wow, that's a big loss on that revenue.
It's deep unprofitability, yet the stock price has sometimes soared, right? There's this growth at any price feel in some corners of the market, even though money isn't cheap anymore. It looks a lot like classic euphoria, maybe some herding behavior.
That does sound familiar. Bit like .com, maybe.
Yeah.
But you mentioned key differences earlier, the infrastructure, the profitable leaders.
Exactly. The fundamentals are different this time. Mature infrastructure, profitable giants leading the way. That wasn't the case in '99 with all the pre-revenue startups.
Are we maybe making the same psychological mistakes? Just applying them to a different technology?
You've hit on something really important there. The investor psychology. Yeah, that has some striking similarities. That whole, this time it's different narrative, it's back. And here's something surprising. If you look at the valuations for the very top companies in the S&P 500, the top 10, they're actually more stretched now than they were even at the peak of the dot-com bubble.
More stretch, really.
Yep. So fundamentally different tech landscape, but maybe some similar investor mania creeping in. It's a worrying echo.
Okay, that is sobering. So what are the big risks then? And what happens next? Is there like an inevitable shakeout? I see things like massive spending plans, like Microsoft's $500 billion Stargate project.
Huge CapEx, yeah. That's one risk.
And then there's geopolitics, right?
Yeah.
The U.S.-China chip rivalry, NVIDIA facing export controls.
Absolutely. Those are major overhangs. And yes, a shakeout seems almost inevitable. History suggests it always happens.
Who gets hit in that scenario?
It'll likely be the companies without strong differentiation. Maybe application software firms that are just sort of thin wrappers around the big AI models, the LLM APIs, not adding unique value.
So who wins long term?
The analysis points towards the foundational players, the ones building the infrastructure, the chip makers, the cloud providers, and also companies that successfully weave AI deep into their existing profitable businesses. Like Microsoft putting Copilot right into Office. That's sticky.
Right, embedding it deep. Okay,
Yeah.
so wrapping this up, what's the key takeaway for you, the listener?
Well, first, the underlying AI tech trend. That's real. It's irreversible. It will change the global economy, regardless of market wobbles.
So think long term.
Exactly. And the challenge for you is navigating this landscape. It's this mix of genuine boom and speculative froth. So the question becomes, how will you separate the real value from the fleeting hype in your own work, your own learning.
Yeah, what stands out to you as the most critical thing to watch? Where's the long-term impact really going to be felt? Something to think about.